Coinbase Exchange. If you're looking to start trading cryptocurrency, you've likely come across Coinbase, one of the largest cryptocurrency exchanges in the US. Coinbase is a place to buy, sell and hold digital currencies like Bitcoin and Ethereum. Now that cryptocurrency is going more mainstream, there are several ways to buy and sell coins on your own, whether it be via Venmo, Cash App or a trading app like Robinhood. But Coinbase is a popular option, touting 73 million verified users. The company made its public debut in April of 2021, which many saw as a vote of confidence for digital currencies as a whole. What is Coinbase? Coinbase is a trading platform that allows users to buy, sell and store more than 30 different digital currencies. Coinbase is more geared towards beginners, while Coinbase Pro, the premium service, is for avid and experienced traders who make high-volume transactions and want more trading options. Investing on apps like Robinhood has boomed in recently. Cryptocurrency is no exception, and Coinbase is reaping the benefits. The company's estimated revenue hit $1.31 billion in the third quarter of 2021. Coinbase is now available in more than 100 countries. The platform is pretty straightforward. Like many trading apps, users can see their balance in a watch list, which allows them to track the prices of different kinds of cryptocurrencies. Traders can also check which cryptocurrencies are the biggest movers. The company is also introducing Coinbase Card, a Visa debit card that users can use to earn rewards for spending the assets in their portfolio. In September, Coinbase announced a new direct deposit option that will allow users to have their paychecks directly deposited to Coinbase and their pay automatically deposited as Bitcoin or another cryptocurrency. Is Coinbase free? Coinbase charges a fee for trading via the platform, unlike apps like Robinhood, which touts free trading. The fees differ for trading on Coinbase and Coinbase Pro, and those for Coinbase can be higher and more complicated. Coinbase charges what's called a spread of about 0.50% when you buy or sell cryptocurrencies, as well as a Coinbase fee, which is a flat fee or determined by factors like where you're based and what type of payment you're using for larger transactions. Coinbase Pro has a simpler tiered fee system with fees between 0% and 0.50% per trade and lower costs for larger dollar transactions. For example, a transaction of less than $10,000 has a 0.50% fee, while a transaction between $10,000 and $50,000 has a 0.35% fee. Coinbase doesn't charge users to hold their assets in a digital wallet or to transfer cryptocurrency from one wallet to another within the Coinbase network, like from Coinbase to Coinbase Pro. But Coinbase's fee can definitely chip away at your winnings, especially if you're not using Coinbase Pro. How to open a Coinbase account? Opening a Coinbase account is pretty straightforward. You'll need a government-issued photo ID, as well as information like your phone number and the last 4 digits of your social security number. Also be ready to answer questions about what you'll use the platform for. When choosing a password, use proper cyber hygiene like a unique password you haven't seen elsewhere and multi-factor authentication to avoid hackers getting a hold of your account. Before you begin trading, you'll need to attach a payment method to your Coinbase account. In the US, you can use a bank account, debit card, wire transfer or PayPal account. You can't currently sell digital currency using a PayPal account, but you can make withdrawals. Is it a good time to invest in cryptocurrency? Cryptocurrencies have been in the headlines after a number recently hit record price highs. In November, Bitcoin hit a record high of above $68,000, more than double what the price had been in July. Meanwhile, Ethereum, the second largest cryptocurrency by market value after Bitcoin, also hit a new high in November at around $4,800. Altcoins, cryptocurrencies that aren't Bitcoin, are grabbing attention too. What to look for in an exchange? Accessibility. Your location may prevent you from buying and selling crypto on certain exchanges due to state or national regulations. Some countries, like China, have banned citizens from accessing crypto exchanges at all. In the United States, there's a lot of regulatory uncertainty around cryptocurrency, and some states have instituted their own regulations. For example, New York requires exchanges to obtain a BIT license before they can operate within the state and only allows licensed companies to offer certain approved coins. Most other states don't have regulations as strict as New York, but many do regulate in some way, or are taking steps to do so. 31 total states have pending legislation regarding digital currencies in their 2021 legislative sessions. According to the National Conference of State Legislators, you can often find information about the geographic limitations of an exchange as well as related accessibility factors, like national currencies accepted on its website or within the terms of service. Security. Cryptocurrency isn't backed by any central institution, and your cryptocurrency holdings aren't protected the same way as money in the bank or traditional investments. Some exchanges like Coinbase and Gemini keep any balances in US dollars you hold with them in FDIC-insured bank accounts, but FTX insurance doesn't apply to cryptocurrency balances to protect your crypto. Some exchanges have insurance policies to protect the digital currencies users hold within the exchange from hacking or fraud. Coinbase, for example, has an insurance policy worth $255 million. That means if Coinbase's reserves were hacked and any amount of crypto up to $255 million was taken, account holders would be protected. Others, like Kraken, rely on their security practices to protect clients rather than insurance policies. Whether you plan to keep your crypto holdings within an exchange or only have it there for a short time before moving it into your own wallet, the exchange's security should be top priority. For example, look into how much of its assets the exchange keeps offline, in hard storage. This is even more important as the value of cryptocurrencies grows, since more value means more lucrative targets for potential thieves. In 2020, there were 28 total attacks on crypto exchanges, the largest of which resulted in more than $200 million in cryptocurrency assets stolen from Singapore-based crypto exchange KuCoin. Look into how much of its assets the exchange keeps offline. While exchanges, by nature, need to keep some crypto active to facilitate trades, it's smart to keep the majority of holdings in cold storage, or offline, where it's more difficult for hackers to access. Coinbase, for example, says it stores 98% of customer funds offline, while only 2% is actively traded. That storage, combined with its $255 million insurance policy, offers more reason to trust your crypto assets will be covered in the case of a hack. Fees are another thing to consider, but don't necessarily let a high fee structure turn you off an exchange. The easier they make it for you to buy it, the higher the fee that you're going to be paying, says Spencer Montgomery, founder of Uinta Crypto Consulting, a program for new investors to learn about crypto. Higher fees can also be a worthwhile trade-off for the added protections and insurance that the bigger, more popular exchanges provide. Exchange fees may be a fixed price, but are often a percentage of your trade. Some exchanges, like Cash App, charge fluctuating fees based on price volatility. Fees are often charged per transaction, and can differ whether you're the seller or the buyer. There may also be different fees depending on which currencies you trade. Make sure you understand exactly how and when an exchange plans to charge you for your crypto transactions before handing over your cash liquidity. If you plan to buy, sell, or trade your crypto, the exchange you choose should have enough trade volume to ensure your holdings are relatively liquid, meaning you can sell them when you want again. This can be an instance where size matters. Often the more popular exchanges are also those with the largest trade volumes. When a lot of trades are happening within an exchange at any given time, it means you have a higher chance of buying or selling the crypto you hold at the best price. Montgomery says crypto prices move very quickly, so when you use an exchange that doesn't have a lot of trade volume, you could end up paying a higher price than you would on more popular exchanges. For example, say you decide to buy Bitcoin once its price falls below $32,000. Coins offered. Not every exchange offers each of the thousands of cryptocurrencies that exist. If you're interested in a popular coin like Bitcoin or Ethereum, you'll probably find it on any given exchange you're considering. But newer altcoins, coins with a very small market cap, or meme coins may require a bit more shopping around. Just remember, these types of coins are often even riskier gambles on top of already highly speculative, more established cryptocurrencies. That's why many experts recommend sticking with the big names like Bitcoin and Ethereum. With any crypto coin you're considering buying on an exchange, only trade in a cash value you're prepared to lose. Thanks for watching. Please subscribe.